Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York, 15th day of July, and this is Trending Markets. We have another day of lower crude oil prices, trading off almost 3% on the day, $1.42 lower, flirting with $50, just above it at $51.62. It's come as close to $51 a barrel as $51.21, and the high $53.50. So you can see we're just off of the lows here. We do have a dollar that is trading up today, up about 0.5%, and it's at 97.14. We are definitely looking for the dollar to continue to climb. We had an initial level of resistance, and at this point, we are close to the market actually taking that resistance area out. We would look at that point, and this is the area right in here just below 98. That's our substantial resistance in the area, and let me try to line that up as best I can. And then, of course, right here, and that's the current area that we are at. So an effective close at or above this point right in here, to me, would signal higher pricing, and we would look for another point at least in the dollar index as this continues to climb off of these lows at around 93.50. We take a look at the S&P. S&Ps and the Dow Jones Industrial were in essence up a little bit during the day, closing off a little bit during the day. You can see we are above 18,000. To me, that's a key level right there, up about 3.41 points, and very, very nominal shift in the marketplace itself. However, when we take into account this only being Wednesday and we look at this particular formation that we're getting here, it's really almost a three-river morning star. We call it a three-river morning star variation. And the reason it's a variation is that you can see that this being our candle that represents our star in the equation is actually in the body of this prior red candle. That's why it's a variation. Had a gap below that, it would genuinely be a three-river morning star. You take this upon confirmation. Confirmation would be that next week, again, this is a longer term weekly chart, but next week we get a green candle with a higher high and a higher low. That also, by the way, traders, would take us back near these tops. And as I said, depending on how it reacts here, if we can get an effective close above these tops and find support, that I'm a long player there. If we simply see the market track back up to these tops and then begin to correct, then we're looking for some sort of a correction or some sort of a release of steam, so to speak, from this last move to the upside. Now, as I said, currencies are jumpy, but they're certainly not as active as we have seen in the recent. Pressure on the euro dollar. They are riding in Greece right now. We're off about 0.5%. We're below 110 now at 109.46. So as I said at the beginning of the week, I wasn't really sure how we would see the euro play out, but I thought we would see a stronger dollar. We're certainly seeing that. When we look at our short term, this of course is a 240-minute chart. You can see that we had this sizable move overseas, and then as we went into our markets today, these each represent 4 hours in trading on a 240. So you've had it quietly drifting lower, but noteworthy is the fact that we made this lower low right in here, and that is significant because that accounts for the intraday low for the day. So traders, yet another way to look at this scenario right now. These are half-a-day Japanese average charts. When we do that, we've also added a linear regression to give us, and the cycle in terms of the length, I've set this at 66 bars in terms of the linear regression itself. So roughly 1 month, or excuse me, a month and a half in terms of trading time. We have dipped below this channel. We have dipped a little bit above this channel, but for the better part of June and July, we have tracked with lower pricing ever since coming off of these highs roughly at 114. We've also now hit the bottom of the channel. One thing that we have seen with this market is predominantly green, but not all green, predominantly almost all red, but not all red. Comes up very, very quick spike, spike down. This is our spike up. We've got our spike down. So if it's going to continue in this channel, we might actually see a spike up, even though the market is headed lower. So in terms of what I believe we will see over the next couple of days, call it the end of this week and into next week, I do think we will see a continuation of lower oil pricing. I think in terms of a downside target in this market, I believe we could see this market go as low as, call it $47.50 per barrel. Dollar, I believe that we'll see a continuation of dollar strength. We've got this nice channel moving up. We don't really get any major resistance till right around 98. Next level above 98, of course, is 98.50, and then this top at 100. These are our different levels. Initially, I think we're trading now at roughly 97.12. I think we've got a clear shot from here to about 98. Now, in terms of the euro, I have been looking for it to go to 108 for quite some time. I kind of really backpedaled a little bit on that call, and that was as this market came back up a little bit and tested up in this area. But I do believe that we've got this clear-cut, defined downward channel in the euro right now. I think we'll continue to see on a longer-term basis this euro move down. In terms of my targets and projections, right now it's about, even if all we see is it going to the bottom of this channel, you're looking at around 108.30 to 108.15. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.